ONON has been one of the largest holdings in my personal portfolio for quite a while now, and it's also been one of our largest profit puppies over Waves Capital since we started trading calls on it in early November. Now, ONON has been off to a very hot start this year, but I still think this stock has plenty of room to run through 2026, and in this video, I'm going to do my best to explain why from both a technical and fundamental perspective. My name is Royce Jacob. Welcome back to Waves Capital. Please give the video a like if you go on to gain value from it. And of course, let me know if you are trading ONON in the comments below. Let's get on to it. All right, guys, you know the drill. We will, of course, be diving into TradingView, and I'll go over some short, medium, and longer-term price targets for ONON as we move through Q1 and Q2 of 2026. But I feel that it's important to cover the fundamentals first. So to do so, I want to go over this recent and very well-written article by Wide Alpha on Seeking Alpha titled On Holding, the Swiss upstart taking on Nike and Adidas. I'll chime in with my own fundamental thesis and, bust out some of my own on apparel when I feel necessary. But for the most part, this is a really well-written article. We're only going to go over the pieces of it that I feel are most relevant to this conversation just for the purposes of your time and my time. But I do recommend checking out this article for yourself and following Wide Alpha on Seeking Alpha. Got to give credit where credit's due. So summary. On Holding AG demonstrates strong pricing power, sustaining demand despite price hikes and tariff pressures, validating its premium brand strategy. ONON's rapid revenue growth outpaces peers, with management guiding for a 30% plus CAGR through 2026 and 20 to 25% post 2026. Gross margins exceed larger rivals, and management targets adjusted EBITDA margins above 20%, with forward EPS growth expected to justify the current valuation. Risks include execution challenges during rapid expansion, competitive responses from incumbents, and potential brand dilution as ONON enters new categories like apparel. Right, yeah. This shirt, by the way, fits perfect. This is the ONON Club Tee. Okay, so if you've got the power to raise prices without losing business to a competitor, you've got a very good business. And if you have to have a prayer session before raising the price by 10%, then you've got a terrible business. Those are the words of the Oracle of Omaha himself, Mr. Warren Buffett. So again, only going to go over some of these parts that I think are most relevant, but to be honest, I've highlighted most of this article. The reason we decided to research further and write this article is that listening to the last earnings call, it stood out that On Holding is showing clear signs of having pricing power. We pay particular attention to pricing power given that Buffett once remarked that for him, it was one of the clearest signals of a good business and more important than having great management. That's a very strong statement. Obviously, great management is important too, though. So strong pricing power. With On Holding manufacturing many of its products in countries like Vietnam, Turkey, and Switzerland, the company is highly affected by tariffs. This is also affecting most of its competitors, as most running shoes are manufactured either in China or other Southeast Asian countries. This brought a test for the company on whether it had the pricing power to pass the additional cost to consumers and still continue to grow. As CEO Martin Hoffman explained during the earnings call, the third quarter experienced a critical test as it was when prices increases went into effect. He explained that it confirmed their pricing power with demand continuing to increase in the American region despite higher prices. Now, growing 10.3% year over year on a reported basis and by 21% at constant currency, this quarter was a pivotal test of our premium strategy as our U.S. price increases came into effect. The results confirmed our view. Demand remained incredibly strong for our premium offerings, clear validation of our brand's pricing power, and the impact of our full price strategy. A premium sportswear brand. With running shoes being a highly competitive category, a legitimate question to ask is where this pricing power is originating. Part of it likely comes from the strength of its brand, part from product innovation and differentiation, and highly efficient and sustainable operations. It is important to note that brand awareness and brand value are two very different things. A brand is valuable and helps create a competitive moat if it allows a company to charge a higher price for the same product. For example, many car brands are well known, but only a few, like Ferrari, really help boost selling prices significantly. Similarly, there are many well-known apparel and accessory brands, but it is most luxury brands like Hermes, and I don't even know what brand that is. That's a weird one to choose to use for the context of this article. That can charge a premium because of the brand equity they have built. So I feel like this is a good time to just chime in with my own experience with On Clothing, because not only did I start to take on this trade when I saw ONON really start to take over the cultural zeitgeist, and when I saw all of the well-to-do Los Angeles housewives start to rock ONON, and all the Wall Street bros start to rock ONON, that's usually a good sign that a brand, not saying that they're the first to popular trends, but that is, in my view, when something is beginning to enter mainstream from kind of, the not underground on. I don't think ONON will ever be underground, but from the niche world, like running and athletics, tennis, to entering once again that cultural zeitgeist that really takes a brand to the next level. So ONON, again, I'm wearing this shirt perfectly. For me, I haven't washed this yet, but I can tell even after I wash it, it's probably going to perfectly fit me. The quality of the clothing stands out incredibly to me versus some other athleisure brands. Like this shirt, I have quite a few Lululemon shirts. I'm not a fan of Lululemon, but I think all of the On clothing, that I have, I like a lot more personally than all of the Lululemon clothing I have for me. I have some windbreakers, I have some jackets, I have pants. On is just a better brand it's just my opinion, but just that's pretty much what matters to me is my own opinion, and I do like On a lot more than Lululemon. And the shoes aren't even comparable. I mean, Lululemon makes shoes, but who the heck wears Lulu shoes? But ONON, classic cloud runners. I've been wearing these things for like 2 years. These are just my go-to. If I'm just going out of the house quickly, if I'm going to go grab some groceries, I'm wearing the Cloud Monsters, sorry. And, if you want to look a little more dressy, I just recently bought this pair when we took some profits from that post-earnings trade. These are the Roger Clubhouse mids. And I do have a few other pairs that I didn't choose to bring in. I can only hold two in my hands. But point is, the product speaks for itself. This is a premium sportswear brand. And in my view, a better example would have been like Low, because they recently collaborated with Low, they're one of the most hyped fashion brands of 2025, likely 2026 as well. So they are, in my opinion, more luxury than something like Lululemon, while also having equally as equivalent, if not like better pricing, which can, as we just went over, can raise over time as they continue to expand into this more premium sportswear luxury category out of just running. Okay, so again, this is just my 2 cents, but I really feel like ONON is solidifying a special place within the marketplace. This brand equity is built over time through innovation, quality, price discipline, and sometimes even by limiting production to create a sense of product scarcity. And On Holdings' case, it appears the company is building a valuable brand thanks to a highly innovative product that truly appears to improve athletic performance. So once again, not only is it fashionable and stylish, it is the shoes. There's a reason I wear them every day. It's because they're good. They're better than the Nikes I own, okay? And we'll get into Nike in a little bit. The company is expanding into brand apparel to compete with the likes of Lululemon and is planning to treat this division as a separate business within the company. While this has worked well for Nike and Adidas, I would argue it's still working, but at one point it did. As a strategy to expand their addressable markets, it remains to be seen how well it works for On. The apparel segment is growing rapidly, but still represents a small fraction of sales and is in the early innings in terms of growth and expansion. Some benefits management highlighted about adding this category are that its customers skew towards a younger demographic, offer an alternative entry into the brand, and shoppers buy more frequently compared to running shoes. All of those make perfect sense. Okay, so moving on, financials. We're about halfway through the article, and then once again, we will dive into the charts and talk about some of these exciting price targets. But financials ON has grown revenue at an impressive rate over the last few years. That's why we've been playing a few of their recent earnings reports. The trend is clearly going up into the right in terms of revenue and really margin compression, which we'll look at right here. But though it has moderated to a mid-30s rate from more than twice that in early 2023, still, if the company can sustain this level of growth for a few years, it could become a large global player within the industry. What has been very impressive is that the company has been able to improve its gross profit margin, despite headwinds like tariffs, and also expand to broader categories like apparel. The operating margin has improved significantly, although this is more in line with the expectations, as operating leverage results from general and administrative G&A and research and development R&D costs growing less rapidly than revenue. I'll let you guys pause it if you want to read this, but I think that this graph here is important. Revenue on the rise, quarterly year-over-year growth. We're seeing a little bit of plateau, but that's expected to pick up in 2026. These are the really important ones: the gross profit margin, which is going up into the right, and the operating margin, which is going up into the right. Okay, so those are both good whenever you're compressing margins, or whenever you're making more money with less money. That's a very, very good trend that a company wants to see, obviously, to boost their revenue and boost their profits. But more importantly, from an investment perspective, this is what investors want to see, and this is what gets investors excited about the future of a company and gets them to want to invest. Okay, so moving on, innovation and sustainability. The company is working hard on making super shoes for a growing number of uses and in a more efficient way. Expansion into other sports, apparel, and new store openings should help maintain a high revenue growth rate. Management confirmed during the last earnings call that they expect the revenue compounded annual growth rate for 2023 to 2026 period to be at least 30%. The company has also shown that working with, this is one of the shoes that I have right here, the center courts. The company has also shown that working with a high-profile athlete endorser like Roger Federer and developing a specific product can help drive sales. For example, a tennis shoe was engineered with input from Federer and his team, and this is a strategy that is likely to work well if replicated for other elite athletes. Okay, so just example, if Messi teamed up with them, I'm not saying this is going to happen. If Messi teamed up with them and created a cleat, which would be pretty sick, then that would probably work well because they're working with competent, talented individuals within their given sports. Okay, so peer comparison among its main global peers, only On Holding and Decker Outdoors, which is Hoka, are growing revenue at double-digit rates. Still, On is clearly in a league of its own, as it has grown revenue over the past 5 years and more than twice that of Deckers and more than 10 times faster than Nike and Adidas. And once again, I can say with confidence that these shoes that I've owned for a couple of years are just better, and I like them more than the Nikes and the Adidas that I've owned for, the last couple of decades. The trend is in favor of ONON. And again, we will go over where this trend could take us in terms of price targets very, very shortly. But surprisingly, ON also has a higher gross profit margin than its larger rivals. Deckers does have a higher EBITDA and net income margins, although this is mostly thanks to the operating leverage from a higher revenue base. If ON can continue growing revenue at a high rate for a few more years, then it is likely to exceed Decker's net income margin too. Okay, the long growth runway. Again, pause that if you like. Valuation, given its much faster growth, it is not surprising that ON trades at a premium price to sales multiple compared to its competitors. With a price to sales ratio at 4.5x, it trades at more than twice Nike's multiple and about 50% higher compared to Deckers. While the current price to earnings multiple appears very elevated, if both sales and margins grow as expected, EPS should quickly increase. In fact, analysts expected EPS to more than double by fiscal year 2027, putting the forward PE ratio for that year at only slightly above 20x. The valuation, therefore, appears justified if management can deliver on its revenue growth and profit margin targets. Okay, check out that. Earnings estimates. This is moving forward. Risks. It's always important to, just keep the risks at the top, maybe not at the top of mind. It's always important to keep the risks in mind, regardless of how bullish you may be on a stock or how much conviction you may have in something. Always keep the risks in mind because, rainy days happen. While on holding could be a potentially attractive investment if they deliver on their long-term guidance, there are multiple risks to consider. The one we consider critical is the execution risk while rapidly expanding. It's already difficult for companies to maintain manufacturing, logistics, pricing, and other key business functions operating well under normal conditions. And this tends to become significantly more difficult when undergoing rapid expansion. Another key risk is the competitive responses from incumbents. Nike and Adidas are probably already working on a strategy to counter ON's rapid rise in the industry. I would personally just argue that they can try, but it's going to be difficult to... Once you fall out of coolness, it's pretty hard to be cool again, especially if you're already a legacy brand like Nike or Adidas. Other important risks include the changing tariff landscape, relationship with distributors, and difficulty maintaining or finding new high-profile athlete collaborations. Entry into the space, or entry to the apparel segment, also adds a risk of brand equity dilution. Again, I would just fundamentally argue with that, saying that it's just better for the brand, especially given some of their low as the example I used earlier, just given some of their high profile, cool, like collaborations within the apparel space. Conclusion, what On Holding has achieved in just a few years, going from basically an idea to a global player in the sportswear market, is impressive. And you know what? We're just going to cut it there, you guys. You can read the rest for yourself. But I'm getting short of breath, and I think it's time to dive into the charts. So I do want to talk about really what I'll say is my 2026 target. This is all optimistic. It's very, very clear that I'm an optimist. But I do want to say that what you see up here, kind of the picture I've drawn in the 75 plus dollar target that I really have is my, again, I'll just say 2026. I personally think it's coming by the summer of 2026, and I'll explain why as we dive in. But just keep in mind, you guys, this is optimistic, but I'm an optimist, and I would be surprised if you're not the same. If one, you're watching this video, and two, if you watched it to to this point, because after reading through all this, it's kind of tough not to be an optimist. Okay, so before we talk technicals, we'll kick it off with the short term and then move long term. I do want to say that I cover ONON pretty much every day in my newsletter, in my trailer newsletter. This is just the one that I wrote this morning, at least the day I'm recording. So I write these every day, and keep in mind, I'll just put this here and show you guys an example of what the portfolio looks like and what the adjustments I make to my options portfolio look like, along with the trade alerts that I send out with them every single day. So as you saw above, On Holding AG is just, it's the largest position within my options portfolio, but it's only a portion. There's a lot of other plays that I'm excited about, and there's just so much that I love to cover on a daily basis, and so much that I think has potential in 2026, just given the macro environment and the macro trends. So if you guys want my daily trade alerts, if you want my daily newsletters like you see here, I've been covering ONON for a long time, and again, it's really been one of our major profit puppies for the Waves portfolio over the past few months. We've locked in some truly life-altering gains from ONON, from our ONON call options. So again, if you want to join the team, then it's the first link in the description of this video. It's my complete portfolio and daily trade alerts and email newsletters. I'll also put the link to sign up to become a member in a pinned comment, and you will get everything that this box here entails for a price of only $15 a month or $40 for every 3 months. That's completely up to you. But I take great pride in the price I charge for this, given the returns that we've seen in 2026 and already this year. Like, regardless of, you could have been trading with $100 just in the first 8 days of January, and you would have probably been able to pay off quite a few months of your subscription with just the first week of the year. So if you want to join, once again, pinned comment, link in the description, join the trading team. It's going to be a great 2026. And for those of you who are already riding with me, I appreciate you. And again, if you do join, welcome to the team. Excited to ride with you. If not, no worries. I still hope this video is bringing you some value, and I hope that you're excited about ONON and you're, as excited as I'm about the stock, because we are looking ridiculously good on the charts right now. So short term, once again, just reflecting a bit since we started trading it, at least most recently, in early November prior to their earnings report. ONON was looking a little dicey. As we zoom out here, you can see ONON, and this is where our longer term price targets will come into play. But ONON had briefly broken, actually for quite a while, had broken below the line of support on this long-term ascending channel. ONON is in a very, very massive ascending channel, almost a megaphone ascending channel that's been in place since all the way back in January of 2023. So we broke below this. Thankfully, we were correct about ONON putting out a solid report. The stock managed to pop nearly 30% in the wake of that report and reclaim this long-term ascending channel, which once again, we will zoom out to and talk about, use it to justify or rationalize those upside price targets. But in the short term, things are looking good. So you can see here pretty much since that early November pop, ONON has just been holding a steady series of higher highs and higher lows. And the day of recording, it looks like we are on the verge of setting in a higher high. Oh, well, I'm sorry, we did set in a higher high, but I personally think given the fact that 4-hour RSI bounced off of its exponential moving average right there, 4-hour stochastic RSI just crossed over to the upside, I think that a higher high is coming into play. And I do think the lines of resistance, this is conservative resistance right here. And this is absolute resistance. If you watch my Trader Tips videos, you would know that. That's a members exclusive. If you want the members exclusive videos, that's $5 a month. Just hit the join button under this. But again, conservative resistance, absolute resistance. You guys know I always trade off of conservative resistance because you want to not get greedy and be one step ahead of the opponent. That is the edge you have, especially if you're trading technicals. So I do think that in the short term, we could see some resistance here. I do expect these lines of short-term resistance on this short-term ascending channel to come into play. But this is where we zoom out and things will get a little more, macro and potentially more exciting. So overall, we are in the short-term ascending channel, but you can still see here that we are in a technical longer-term downtrend. Okay, and ONON will still be in a technical downtrend until we break above what I consider to be the line of absolute resistance on said downtrend, which is this darker blue line, okay? Today, we managed to pretty much test my line of conservative resistance on this longer-term downtrend that's been in place since January of 25. So almost a year now, this downtrend has been in play. But, given everything we just discussed, given the momentum we're seeing, given the fact that even these daily RSI just bounced off of its exponential moving average. We're nowhere near overbought levels just yet, which overbought on daily RSI is dictated by these dash lines right here. That would be an 80 plus. So we still have a lot of room to run prior to being overbought on the charts, at least as far as 1-day RSI is concerned. And I think that will lead. Just the momentum we're seeing now, the higher highs we're seeing, just the bullish sentiment that you can tell is starting to build up behind ONON stock that I'm just seeing in some of the stuff I post. It leads me to believe that we do get a breakout from this, most importantly, this line of long-term absolute resistance. Once again, this guy right here, I do think we break above that. And then once we do, that's where this macro picture really comes into play, this long-term megaphone ascending channel. Because also when you look at it like this, it's looking like ONON is getting ready for another rally. Okay, just same thing here. 4-hour, 1-day, 1-week RSI, all looking similar. Bouncing off that exponential moving average, moving to the upside, not anywhere near overbought territory, with stochastic RSI curling upwards. This is a very, very bullish picture on almost every critical time frame, at least for me as a swing trader, as a medium-term swing trader. And again, just as you saw here, I am holding April call options on ONON. And, maybe we just slowly travel up into the right. Maybe we range trade for a little bit, but I do think that ONON absolutely crushes their next earnings report when it comes March 12th. And I do think that ultimately, if we don't make it up there by then, which would be very optimistic, I do think that earnings report acts as the catalyst that will take us up to these lines of macro resistance, or I should say just resistance on this macro ascending channel. Once again, this being conservative resistance and this being absolute resistance. Let's just say that these are tested. Let's just say April, okay, when those contracts expire, mid-April of 2026. If we test conservative resistance, it would take us up to about $78. And if we test absolute resistance, I don't know why TradingView is doing that. If we test absolute resistance, it would take us up about 65% from current levels to almost $85. Once again, I want to make it very clear that this is an optimistic stance, an optimistic opinion, but my money's where my mouth is. I think there's good reason to be optimistic given everything we just read in this article. And, I'll probably buy another pair of ONs to celebrate once and if. I'll probably buy, I'll buy ONs for the entire family. The whole family already has a pair. I'll buy another pair of ONs for the entire family once and if these targets are achieved. So let me know what you thought about anything we discussed. Let me know if, how you're choosing to trade on. Is it calls? Is it just common shares? Both, I think, could do incredibly well over the short, medium, and long term. And, ride on. I'll see you guys in the comments. Thank you for watching. And until next time, always remember, take action, make waves. Peace.